Breakdown or necessary bounce? Let's catch up on Bitcoin. So over the weekend we saw Bitcoin pump following the announcement of a debt ceiling deal. There was this run up here which took us to the trend line of our falling wedge. Overall, as we always say, this is a bullish formation. However, over the past 24 hours we saw this kind of breakdown. From a technical standpoint, things are still bullish. However, after the initial good feeling from the debt ceiling deal on Tuesday, failing to break out saw us retrace, and I think a lot of people are putting that down to some consumer sentiment data that came out in the States. However, I'm not certain that that narrative is entirely correct. So the consumer confidence basically measures confidence in the economy against a baseline of 100, which was set in 1985. So if the reading's over 100, people are more confident than they were in 1985, and if it's less than 100, they are less confident. The data came in over 100, so we had kind of positive consumer feeling. However, unfortunately, in this kind of strange economic environment that we're in, people being confident and going out and spending money is a bad thing, as consumers consuming generates price increases, as demand increases, which causes inflation. So the widespread narrative is that this is affecting the potential interest rate hikes at the next Fed meeting on June the 14th. However, we looked at this at the back end of last week, and again I think on Monday. So this is the CME Group's FedWatch tool, and I think that we'd already seen a sentiment shift. We knew that that consumer confidence was going to come in high because we'd already seen the inflation data coming in high, which was pushing us towards the reality where we're going to see another interest rate hike anyway. So I think that that positive consumer sentiment data had already been priced in. We already knew that we were going to get this 25% basis point hike. So I don't see that as being the reason that we saw the breakdown in Bitcoin price yesterday. It may have been a contributory factor, but it's probably not the main reason. I believe that the main reason was, however, still linked to the CME, or the Chicago Mercantile Exchange that we were just looking at. So on TradingView, you can get this free indicator, which is the CME Gap Finder. So you can see that it draws on these little boxes here. And effectively what this is doing is, when the Chicago Mercantile Exchange closes on Friday and then reopens on Monday, this is identifying if there's any kind of movement in price between those 2 points. So for example, here we can see this is where the market would have closed on Friday. And price is all the way down here, so 26.9. And when it reopened on Monday, price was all the way up here at 27.9. So price has jumped up about $1,000. Now, what generally happens is, through a couple of mechanisms, is that price retraces and completes these gaps. So it comes back down to where we were on Friday and kind of puts everything back to normal. Now, the reason for that is that generally you'll have a lot of very big investors who may have taken short positions, price is pumped, they want to pull that price down to either get out of break even or to profit from that position. And then secondly, because we know that this is likely to happen, we've got lots of retail traders like us and also lots of algorithms and bots that as soon as a CME gap prints will go long or short on the understanding that price is going to move in that direction. They fill with unnerving accuracy. It's like 85% of the time, I think, on the last time we sort of did a historical check on Bitcoin. So as I said, we normally trade on these. So in fact, actually on, let's have a look here. So 31st of May, this is today. We scroll back up. We can see, yeah, here we are last night. So 29th of May at 9 p.m. UK time. We took out this short position once we confirmed that CME gap. So we went short with quite a high leverage on this because we know we're only going to get that small percentage movement. And because it started to bounce, having pretty much reached the bottom range of the CME gap, we closed that out this morning. Again, if you want to get access to these signals in real time, obviously here on YouTube, we're responding with a delay. If you wanted to get that real-time analysis of the CME gap and the trades to go with it, everything's free on Discord. So just sign up there. The link will be in the description, and you can kind of get this stuff in real time. So following on from that mini rejection, we have slightly bounced here. I think that it's probably worth just having a look at a slightly more recent trend line, and I think we can draw that in. So we can see these decreasing highs, the breakout on the back of the debt ceiling announcement, and then the retrace back down to the bottom of this range. And currently we're kind of holding there. So we should, given that things are still technically bullish, we should expect perhaps to have another retrace and test the upper trend line. The issue with that, though, is just this incredibly flat volume. With volume so low, we could see dramatic or sudden moves, so be careful when trading today. We do have some economic data coming out, so we've got the jobs openings. Again, in terms of Bitcoin and bullish outcomes, we want job openings to be low. We want to see a shrink in the economy, which should drive the Fed towards more quantitative easing policies rather than quantitative tightening. However, it's very unlikely. It looks like they're pretty much set on that interest rate hike. The last thing I wanted to touch on was perhaps something slightly more long-term, which is the Bitcoin spot ETF and the Grayscale legal case against the SEC. So what's happening here is that we have Grayscale, which is the single largest holder of Bitcoin, looking to monetize that holding through what's called an ETF, or an exchange traded fund. So that works a lot like any basic investment fund, i.e. they have assets that they hold which are going to increase in value. You buy into that, provide liquidity for them to buy more assets, and then you share in the profits as those things increase. The difference with an ETF is that, as the name suggests, it's traded on exchanges. So it becomes like a share within that, and you can buy and sell as the fund increases or decreases in value. It's an amazing way to drive liquidity, and also you want Grayscale to be out there purchasing more Bitcoin with the profits that they generate, and from the initial sale of those shares. Once it's listed. However, despite having a futures ETF, the SEC has consistently blocked Grayscale's attempts and other investment firms' attempts to start a spot ETF. And there was always a feeling that the SEC's reasoning for that was very weak, and Grayscale decided to challenge it in court. The article here, which is interesting in terms of its timing, but basically the thrust of the article is that even if Grayscale win in their SEC case, which most people are expecting them to do, that doesn't necessarily mean that we automatically then get the spot ETF. It'll depend on the wording of the verdict. So it may well be that they just say that the SEC's current reason for rejecting is invalid, and the SEC can therefore just give a different reason and tie them up like this ongoing. Or the wording may come out that there is no realistic reason to not allow an ETF, in which case that's going to be tremendously bullish. I do think it's interesting that this article just came out, perhaps foreshadowing that there is an inevitable end, or that the end game in this case is close. Indeed, if we could get a couple of regulatory L's for the SEC here and in the XRP case, that could be incredibly bullish again for Bitcoin, because it gives us a framework through the idea of court precedent for regulation going forward. And that is really what we need if we're going to see these huge firms and institutions buying in. All our trade signals are completely free on Discord. We also have lots of copy trading services. We have bots, we have on-chain analysis, we have all our videos, full transparent results. Everything that you would need is on there. It's completely free, so join, give us some feedback. We'd be really interested to know what you guys think. If you've got any comments, you can drop them in below, or you can come and chat to us live on Discord. Thank you very much.